Welcome back. If you are here after a rough session, you do not need another lecture about discipline in the abstract. You need a way to stand in your kitchen at night without turning one red day into a story about who you are as a person. In the United States trading culture, performance is often sold as identity. Green means smart. Red means broken. That framing is not just inaccurate. It is psychologically expensive. This episode is about recovery mechanics, how to stabilize your nervous system, separate pain from plan, and return to markets without performing surgery on your self-worth with leverage. Nothing here is financial advice, tax advice, or therapy. It is educational psychology for adults who trade public markets and sometimes discover their emotions are louder than their rules. We will talk about shame chemistry, revenge impulses, sleep, relationships, feeds, journaling that actually gets done, and the quiet discipline of re-entry sizing. If you want a single takeaway early, take this. The closing print is information about a trade. It is not a certificate of your value. The market can be wrong about you all day long. Your job is to be right about your process anyway. Stay with the slow parts. Slow is how you stop one bad day from becoming a bad month. Shame after a loss is not a moral insight. It is a chemical state. Your brain treats public failure like social threat because humans evolved in small groups where reputation mattered for survival. A trading loss is not a tribe expulsion, but your body can respond as if it is. That mismatch produces rumination, replaying the trade like a crime scene, inventing witnesses, sentencing yourself. The first recovery skill is to label shame accurately. Say it plainly, this is a stress response. Then reduce the inputs that keep restoking it. That includes refreshing your account like a slot machine, reading comments that mock losers, and narrating your day as proof you will never succeed. In American online finance spaces, shame is also monetized. Algorithms reward outrage and comparison. Your feed can turn a bad hour into a bad identity. Protect your attention the way you protect capital. Put the phone down. Eat protein. Drink water. Walk 10 minutes outside. These are not cute wellness tips. They are preconditions for rational thought. If you think walking is irrelevant to trading, you are still confusing trading with thinking. Thinking is a biological process. Trade it with care. Revenge trading rarely tries to buy money first. It tries to buy relief. Relief from humiliation. Relief from the feeling of being mocked by the chart. Relief from the internal voice that says you were exposed as a fraud. That is why revenge trades often ignore levels, ignore sizing, and ignore time. They are not investments. They are attempts at emotional settlement. The market is a bad therapist. It does not care about your dignity. It only responds to orders. So the adult move is to translate revenge energy into a non-trading action that actually settles the nervous system. Cold water on wrists, push-ups, a shower, a scheduled call with a friend who does not know what a candlestick is. If you need a mantra, use a boring one. I am allowed to feel stupid and still keep my rules. Stupid is a feeling. Blown accounts are a behavior chain. This session will keep repeating a simple distinction. Feelings are data, not commands. You can feel furious and still not click. The gap between feeling and action is where professional habits live. If you have never practiced widening that gap, start today. Not tomorrow. Tomorrow is where revenge hides. After pain, the brain wants a dramatic correction. Win it back fast. Prove something. Make the internal screaming stop. That urge is understandable and dangerous. Dramatic fixes usually mean oversized trades, new strategies discovered at midnight, or sudden vows that you will never trade again followed by sudden trading again before dawn. Drama feels like control. It is often the opposite. Control is small, repeatable actions with clear limits. In U.S. retail environments built for speed, drama is always one tap away. Your job after a bad day is to become intentionally boring on purpose. Boring does not mean passive. It means predictable. Predictable sleep. Predictable meals. Predictable rules. The market rewards some people with chaos. It rewards survivors with steadiness. If you fear boredom, ask what your boredom fear is protecting. Often it is protecting you from feeling small. Small is not the enemy. Small is survivable. Arrogant is the enemy. Arrogant sizing turns a mistake into a catastrophe. If you want a dramatic life, build it outside the brokerage account. Inside the account, build a craftsman shop. Measured cuts, measured risk, measured repetition. Here is a simple frame that helps after a loss. Bucket 1 is pain. Bucket 2 is plan. Pain includes feelings: shame, anger, fear, grief, numbness. Plan includes mechanics: what you did, what size you used, what rule broke, what context mattered, what you will change next time. Most traders mix the buckets. They try to solve pain with plan adjustments made in a frenzy, or they try to solve plan problems by venting without measurement. Neither works. After a bad day, spend 10 minutes writing pain in plain language, no trading jargon. Then spend 10 minutes writing plan facts like a technician. If you cannot separate them, you will negotiate with your emotions using leverage, which is how accounts die. This is especially important in the United States, where hustle culture praises grinding through pain. Grinding through pain is not the same as learning from pain. Learning requires clarity. Clarity requires separation. If you feel guilty taking time for separation, notice that guilt. Guilt is another feeling that pretends to be productivity. Real productivity after a loss is calm review, not heroic recovery trades. Rumination is a private film studio where you are the villain, the victim, and the director. The scenes loop. The dialogue sharpens. The audience is imaginary and cruel. If you want to reduce rumination, treat it like a bad TV show. You do not argue with the screen. You change the channel with your body and environment. Stand up. Open a window. Write the loop down once, then close the notebook. Some traders in the U.S. benefit from naming the narrator. Call it the critic. The critic is not wise. The critic is fast. Wisdom is slower and quieter. Another practical tool is time boxing. Allow yourself 5 minutes of replay, then a hard stop. The goal is not to pretend you do not care. The goal is to prevent care from becoming compulsive storytelling. Compulsive storytelling turns one loss into an identity wound. Identity wounds seek dramatic repairs. You already know where dramatic repairs lead. If you journal, journal like an engineer, not like a novelist. What happened? What rule? What next? Save literature for hobbies. Save engineering for trading psychology. Sleep is not a wellness luxury. It is cognitive infrastructure. Sleep debt impairs impulse control, pattern recognition, and emotional regulation. In trading terms, it silently increases effective position size because it increases the chance you will break rules. After a bad day, the temptation is to stay up late researching, watching replays, or doom scrolling finance social. That choice borrows from tomorrow's self. Tomorrow's self is the one who has to click buttons in a live market. If you want a competitive edge that costs no money, go to bed at a boring hour. If you cannot sleep because your mind races, do not trade the next morning on a macho principle. Reduce size or skip. Skipping is a trade. It is the trade that says my brain is not in court today. American culture sometimes treats rest like weakness. Markets treat rest like risk management. Choose which religion you want to follow. The one that sounds tough or the one that keeps you solvent. After a red day, the American feed becomes a psychological weapon against you. Winners post. Losers lurk. Influencers sell certainty. Comment sections reward hot takes. Your brain will seek external validation or external blame. Neither is a trading plan. If you consume finance social while ashamed, you are drinking salt water. It will not hydrate you. It will keep you thirsty. Set boundaries that sound extreme because they are. Mute accounts that spike your heart rate. Remove apps from your phone for 24 hours. Replace scrolling with one slow task. Cook a meal, walk, lift weights, call a sibling. If you fear missing information, remember you are not missing edge. You are missing noise packaged as edge. The informational value of most hot takes approaches zero compared to the emotional cost after a loss. If you must stay informed, schedule a 30-minute window tomorrow and read primary sources calmly. Calm reading is different from compulsive checking. Compulsive checking is not research. It is self-harm with a Bloomberg aesthetic. Isolation amplifies trading shame. If you can safely talk to someone who does not trade, do it. Not for advice, for perspective. A non-trader can remind you that a red day is not a referendum on your entire life. They can also notice your face, your tone, your absence from dinner. In the United States, many traders hide losses from partners because they fear judgment or because they confuse privacy with secrecy. Secrecy feeds shame. Privacy is healthy boundaries. Secrecy is fear with a lock on it. You do not have to disclose dollar amounts to be honest. You can say, I had a rough day with risk. I am working on my rules. I need a walk. That sentence is more mature than 90% of finance bravado online. If you have no one to talk to, consider professional support. Therapy is not weakness. It is infrastructure for a high-stress pursuit. This episode is not therapy, but it can point you toward humility. Humility is not thinking you are stupid. Humility is knowing your brain can lie loudly after pain. Your environment trains you whether you notice or not. After a bad day, reset the trading room literally. Clean the desk. Close extra tabs. Remove sticky notes with angry slogans. Lower monitor brightness. Make the space feel like a workplace, not a battlefield. If you trade from the couch, stop. Couch trading invites sloppy posture and sloppy sizing. If you trade from multiple monitors, consider one monitor for a week. Friction is not always bad. Friction can protect you from reflex clicks. In U.S. homes, trading often competes with family life. If family sees you twitch at notifications, they learn that markets own you. If you want love and longevity, teach boundaries with your devices. Phone on silent during meals. Brokerage app logged out by default. Open only in scheduled windows. These rules sound domestic. They are risk controls. The risk is not only money. The risk is relational trust. Many traders would rather lose money than admit they cannot control their attention. That is ego talking. Ego is expensive. Before you reopen a brokerage app after pain, use a timer. 10 minutes minimum. 30 minutes better. The timer is not superstition. It is a commitment device that breaks the reflex loop between emotion and click. During the timer, do something physical. Not motivational scrolling. Physical reality. The market is abstract. Your body is concrete. Ray grounding matters because abstraction is where revenge lives. Some traders use a checklist on paper: water, food, bathroom, posture, written plan. Only after the checklist do they log in. If that feels childish, compare it to the childishness of blowing a week because you could not wait 11 minutes. Professional environments use checklists for a reason. They assume humans become unreliable under stress. You are human. Stress is guaranteed. Therefore, checklist is not beneath you. It is aligned with reality. If you want a rule with teeth, combine timer with size reduction. First session back after pain is not the session to prove genius. It is the session to prove discipline. Your journal after a bad day should be ugly and factual. Date. Instruments if relevant. Planned risk versus actual risk. Where you broke rules. What you felt in one word. What you will do differently next time in one sentence. No metaphors required. Poetry feels good but often hides facts. Facts are what change behavior. In the United States, some traders avoid journaling because it feels like evidence against themselves. Reframe it as maintenance logs. Airlines maintain engines without shame. You maintain cognition. If you cannot write because you feel too ashamed, write one line. I am ashamed and I will still write. That line breaks shame's monopoly. Also avoid turning the journal into a courtroom where you prosecute yourself for being human. The goal is learning, not self-destruction. If your inner voice sounds like a cruel coach, fire that coach. Replace with a calm engineer voice. Engineers do not scream at metal. They measure, adjust, test again. Your account balance is a number. Your identity is a life. When those two merge, every drawdown feels like dying. That fusion is optional. You can feel disappointed without narrating yourself as fundamentally flawed. You can feel proud of a green day without narrating yourself as gifted. Gifted narratives create fragile confidence. Fragile confidence breaks rules after the first surprise. In U.S. culture, money is often used as a scoreboard for worth. Markets exploit that belief because it increases turnover. Your psychological defense is to keep multiple scoreboards. Behavior scoreboard, did I follow rules? Health scoreboard, did I sleep and eat? Relationship scoreboard, was I present? Profit scoreboard comes last on purpose. If profit is first, you will eventually sacrifice everything else for it. And then profit becomes harder because your life becomes unstable. Stability is not glamorous. It is load-bearing. If you want a mantra for identity separation, try this. I am a person who trades. I am not a trade result. People who trade can have bad months and still be decent partners, parents, and friends. People who fuse identity to P and L often cannot. Choose fusion carefully. Fusion is a debt product with hidden fees. A repair trade is planned, sized, has invalidation, and exists to return you to your system without drama. An ego trade exists to soothe shame fast. The difference is not the instrument. It is the internal contract. Ego trades whisper, prove you are not a loser. Repair trades say, restore process with humility. After a bad day, ego trades multiply because the market feels like it owes you something. The market owes you nothing. If you attempt a repair trade, write the plan before entry. If you cannot write it, you are not repairing. You are negotiating with pain. Negotiating with pain is how size creeps. Size creep is how Tuesday becomes a margin call. In American options culture especially, repair attempts can become lottery attempts because convexity feels like a shortcut to emotional closure. Shortcuts often extend the pain. If you need closure, close the laptop. Closure is a ritual, not a strike price. Rituals can include journaling, walking, paying a bill, doing laundry. Real-life tasks reconnect you to a world larger than ticks. After pain, your default size should be boring. Minimum viable size means the smallest size that still lets you execute your plan without feeling fake, but not so large that your heart rate becomes a signal. If your heart rate becomes a signal, you are not trading. You are performing stress. Some traders need to paper trade for a day. Pride hates paper trading. Pride also pays tuition. Choose tuition consciously or pay it accidentally. If you refuse to reduce size because you need to make back losses, you are mathematically and emotionally fused. Making back losses is not a plan. It is a hunger. Hunger makes you bite anything. The U.S. market serves infinite bait. Your job is not to eat every worm. Your job is to fish with a method. Minimum viable rate entry is how you prove to yourself that you can click calmly. Calm clicking trains neural pathways. Panic clicking trains panic. If you fear being bored by small size, good. Boredom means you are not chasing drama. Drama is what blew the account. Replace drama with repetition. Repetition is how skill becomes reflex. Reflex without rules is danger. Rules with small size is training. Wanting to get back to flat on a day or a name is understandable. It can also become a psychological trap. Obsession with flat turns the market into a debt collector in your head. You start taking marginal trades because they feel like installments on dignity. That is ego trading with accounting language. Sometimes the healthy move is to accept the red day as a closed chapter and rebuild slowly from a smaller baseline. That sentence angers people because it feels like losing twice. But rebuilding slowly is how professionals survive variance. Variance does not care about your need for symmetry. Symmetry is an aesthetic preference, not a market obligation. If you notice obsessive flat seeking, label it aloud. Obsession is a signal that your nervous system is trying to regulate itself through the broker. Find regulation elsewhere first. Exercise, sleep, social connection, sunlight. Then return to markets with rules. If you cannot stop thinking about flat, schedule worry time. 10 minutes paper only. When the timer ends, stop. Your brain will protest. Treat the protest like a toddler. Firm kindness. Not every thought deserves execution. Expectancy is the cold summary of your behavior over many trades. Feelings remember yesterday. Expectancy remembers the distribution. After a bad day, feelings scream that your edge is gone. Maybe. Maybe not. One day is not a distribution. 1 week might not be either. That does not mean you ignore mistakes. It means you separate noise from signal, the way adults do in science. Write down what broke. Rule break, size break, context break. Fix the break. Then measure again, over a sample large enough to mean something. In the United States, tax reporting and account statements can increase shame after losses. If that applies to you, handle logistics calmly with professionals. Shame spirals plus tax confusion equals worse decisions. Expectancy thinking also helps with outcome independence. Outcome independence does not mean apathy. It means your self-respect anchors to process quality, not to whether the market cooperated in a 60-minute window. If the market could rewrite your self-respect in an hour, you will behave like a yo-yo. Yo-yo behavior is how retail accounts become statistics. Be boring on purpose. Variance can make good trades lose, and sloppy trades win over short samples. That randomness is morally neutral. It does not reward virtue, and it does not punish vice on your preferred schedule. Many traders hate this because humans crave fairness narratives. The market is not fair. It is probabilistic. Your psychology task is to stop interpreting luck as character and bad luck as punishment. Interpreting luck as character creates arrogance. Interpreting bad luck as punishment creates shame spirals and revenge. Both distort the next decision. A healthier line is, I controlled what I could control. The rest was distribution. That line does not eliminate pain. It prevents pain from becoming doctrine. Doctrine is dangerous because doctrine drives oversized conviction. If you need spirituality in trading, let it be humility, not certainty. Humility sounds weak until you realize it keeps you alive when models break. In American public markets, models break often. Humility is how you survive breaks without self-destruction. Hope is not a risk management system. Rules are. After a blow-up day, hope often sounds like tomorrow will be different because I feel different. Feelings are not stability. Stability is documented behavior under pressure. Rebuilding trust with yourself happens through small kept promises. 10 minutes of journaling. Timer before login. Size cap. Session stop time. When you keep small promises, your brain learns you are safe to listen to. When you break promises, your brain learns you are not in charge. That learning matters more than any indicator. In U.S. hustle culture, people underestimate small promises because they want big transformations. Big transformations are usually stacks of small kept promises that nobody films. If you want a viral mindset, film the boring truth. Consistency is the flex. If consistency feels unavailable, shrink the promise until it is available. A 5-minute walk beats a vow to never feel angry again. Vows are theater. Systems are survival. CPI weeks and FOMC weeks can spike volatility and attention. If you are already emotionally raw from a recent loss, event weeks hit harder because sleep is worse and narratives are louder. The psychology playbook is not prediction. It is impulse containment. Pre-decide your max loss for the week. Pre-decide your max number of trades. Pre-decide conditions for no trade at all. Write it when calm. Sign it like a contract with yourself. If you cannot sign it calmly, you are not ready to participate in headline roulette. Sitting out is allowed. Sitting out is a position. It is the position that says my mind is not in court for this game show. American media will make sitting out feel like cowardice. Cowardice is breaking rules after pain. Courage is keeping rules when the crowd is screaming. If you do participate, reduce size until your body feels almost bored. Boredom is a filter. Excitement after pain is often a trap. Leverage turns small mistakes into large consequences faster than intuition expects. Emotional hair triggers are the topics that make you click fast. Revenge, proof, getting even, reclaiming dignity. Leverage plus hair triggers is a predictable disaster category. After a bad day, your job is to reduce leverage in every sense: financial leverage, time leverage, and information leverage. Fewer tabs, fewer instruments, fewer narratives. If you trade options, respect convexity's ability to make feelings explosive. If you trade stock with margin, respect the margin call as a psychological event even before it is a financial one. Margin call can feel like public shaming delivered by software. The prevention is not bravery. The prevention is smaller exposure and clearer stops before emotion arrives. In the United States, access to leverage is easy. Easy access is not the same as appropriate access. Treat leverage like prescription medication. Use the smallest effective dose and stop if side effects appear. Side effects include insomnia, irritability, hiding from family, and obsessive account checking. Community can help or hurt you. Support sounds like, here is a framework, here is accountability, here is a calm voice. Hurting sounds like, everybody is in this play, you are late, prove you belong. After a loss, hurting is emotionally attractive because it offers belonging fast. Fast belonging is expensive. Choose communities that reward process transparency, not screenshot status. Mute group chats during execution windows. If a community makes you trade more after pain, it is not support. It is acceleration. Also beware the trap of confession theater, where people compete for worst story. Pain is not a contest. If you share for clarity, not for ranking. In U.S. online spaces, ranking pain can feel like connection, but it can also deepen rumination. Connection that heals often looks quieter. One friend, one therapist, one mentor who emphasizes rules. If you cannot find that, be that voice for yourself by reading your rules aloud. Your voice still counts as community if it is steady. Trading losses can spill into family life as irritability, withdrawal, or obsessive phone checking. If you care about love, treat family boundaries as part of risk management. Tell the truth in a bounded way. I am stressed about work. I need 30 minutes to reset. I will be present after. Do not ask family to be your therapist unless that is literally their profession. Do ask for simple support, a walk, a meal, time without interrogation. In American households, money stress is already common. Trading stress can stack on top and create shame double binds. If you feel ashamed for feeling ashamed, pause. Shame double binds are loops. Break loops with action in the real world. Dishes, kids' homework, grocery run. Real tasks remind you that your worth is not only a brokerage balance. If your partner does not understand markets, that is okay. They understand tone. Improve tone, by improving sleep and reducing compulsive checking. If you fear honesty will scare people, consider that secrecy scares them more over time. Secrecy imagines worse than bounded truth. You may already know the idea. After repeated losses, stop. After a catastrophic day, the circuit breaker needs to be stricter, not looser. Stricter means fewer trades, smaller size, shorter sessions, or a full day off. Stricter feels insulting to pride. Pride is not capital. If you must trade day 2 after pain, predefine what counts as a loss for breaker purposes. Is it 1 loss? 2. Dollar-based or rule-based? Write it. If you hit the breaker, the next move is not negotiation. The next move is shutdown rituals. Log out, stand up, water, timer, walk. If you think you are special and the breaker does not apply, you are in the exact mental state the breaker exists for. Special stories are variance's favorite food. The market enjoys special stories briefly, then sends a bill. Professionals are not special. Professionals are consistent. Consistency is the opposite of post-pain heroics. Heroics are how amateurs convert 1 loss into a saga. Imposter feelings spike after losses. You feel like a fraud if you talk about discipline while breaking rules. The fix is not positive affirmations. The fix is measurable behavior. Grade the day on process. Did you pre-plan? Did you size correctly? Did you stop on time? Did you journal honestly? If process was good and outcome was bad, you still earned a dignified day. If process was bad and outcome was good, you earned a warning. Outcome good with bad process trains catastrophe. Outcome bad with good process trains patience. Patience is an underrated trading emotion because it does not feel heroic. In the United States, hustle culture worships results screenshots. Ignore that religion for a month. Worship process screenshots privately. Your journal entries, your timers, your size caps. If you feel like a fraud because you are not profitable yet, separate learning phases from lying. Lying is claiming edge without evidence. Learning is tracking evidence without self-hatred. Fraud feelings shrink when your behavior matches your stated values. Values are not vibes. Values are actions repeated. Tax season and accounting can trigger shame spirals for traders in the United States. Numbers become moral judgments. If taxes stress you, use professionals and separate tax logistics from self-worth. A tax bill is not a verdict on your soul. It is a logistics problem. Regret after losses often masquerades as tax regret. You replay what you should have done. Replay without learning is self-harm. Learning means changing one behavior next quarter. If you cannot face statements, schedule a 15-minute appointment with yourself to open them calmly with tea. Avoidance grows shame. Exposure with support shrinks shame. If you feel alone in tax confusion, you are not. Many traders do. Competence is built slowly. Competence includes asking for help without interpreting help as failure. Failure is refusing help until consequences force it. Choose earlier help. Earlier help is cheaper emotionally and financially. Longevity in public markets is not built from viral moments. It is built from boring days where nothing dramatic happens because you refuse drama. Boring days include skip trades, reduced size, early session end, and quiet evenings with family. Boring is a strategy because drama taxes attention and attention is finite. If you want a life worth living, you need attention left for love, health, and craft. Trading can consume attention like fire consumes oxygen. After a bad day, you will crave drama to feel alive again. Choose aliveness through training, friendship, sunlight, and sleep instead of through oversized risk. The United States markets will still offer excitement tomorrow. Your future self wants you to arrive tomorrow intact. Intact includes relationships. If your trading plan cannot survive a boring week, it is not a plan. It is a dependency on stimulation. Dependencies break people. Build a plan that treats boredom as success. Flat emotional response does not mean you feel nothing. It means feelings do not automatically become orders. You can notice anger without obeying anger. You can notice fear without obeying fear. That skill is trained, not innate. Training looks like repetition under mild stress with small size. If you only train under extreme stress with large size, you train panic. Panic becomes reflex. Reflex is not strategy. Some U.S. traders misread calm as weakness. Calm is power. Calm is what lets you execute a plan when others rotate into hysteria. If you cannot access calm, access structure. Structure is easier than calm early on. Structure means written rules, timers, and breakers. Calm often follows structure when trust rebuilds. Trust rebuilds through kept promises. If you want calm faster, keep smaller promises more consistently. Grand calm vows fail. Small kept promises compound. Sometimes after a big loss, calm returns suspiciously fast. Not because you healed, because you numbed. Numbness can follow shock. Numbness can also precede impulsive trades because you feel detached from consequences. If calm arrives with emptiness, slow down further. Detached trading is dangerous trading. Healthy calm feels grounded, not hollow. Grounded calm includes appetite, sleepiness at night, and interest in non-market life. Hollow calm includes scrolling, skipping meals, and feeling like you are watching yourself from outside. If you recognize hollow calm, treat it as a risk state. Risk states deserve smaller size and shorter sessions. American culture praises resilience narratives. Fake resilience is silent collapse. True resilience includes honest tiredness. Rest is not defeat. Rest is repair. If you trade while hollow, you are not resilient. You are dissociating. Dissociation and leverage are a bad combination. Choose earth. Eat food with texture. Talk to a human. Return later. Pick one behavior to measure for 30 days. Rule breaks, oversized trades, late-night checks, or missed sleep. One variable only. Track it daily without moralizing. The goal is a chart of behavior, not a diary of shame. At the end, you will see clusters. Clusters reveal triggers. Triggers can be managed once visible. Many traders fail because they track too many variables and then interpret noise as character flaws. One variable experiments are how adults learn. In the United States, people love 30-day challenges for fitness. Apply the same structure to trading psychology. Fitness and trading psychology both reward consistency over intensity. Intensity after pain is how people get injured. Consistency after pain is how people rebuild. If you want a metric that matters, measure behavior separate from profit for 30 days. Profit will still matter later. Behavior first prevents profit from becoming a liar that trains bad habits. You can close a painful trading chapter without pretending it did not happen. Closing means you stop rehearsing it hourly. You archive it like a case file. The lesson stays. The rumination goes. If you struggle to close chapters, use a ritual. Write a one-page post-mortem. Put it in a folder named Lessons. Delete shortcuts that reopen the brokerage app reflexively. Change one environmental cue so your brain notices a new season. Seasons matter psychologically. Humans respond to cues. If your cue after loss is doom scroll, replace with walk. Cue replacement is not trivial. It is how habits change. In American online life, algorithms reopen old emotional chapters constantly. Muting is seasonal change. Choose seasons on purpose. Your mind deserves spring after winter. Spring is not green P and L. Spring is calm attention returning to your life. This is the closing truth of recovery psychology. The market will still be there tomorrow. Your family needs you tonight. Your body needs sleep tonight. Your future self needs you to avoid turning one bad day into a permanent wound. Trading rewards patience, but patience is not passive. Patience is disciplined waiting with rules. If you take nothing else, take this. You are allowed to lose a day without losing yourself. You are allowed to rebuild slowly. You are allowed to be boring. Boring is how professionals stay in the game long enough for skill to matter. Skill without longevity is a party trick. Longevity without humility is a time bomb. Choose humility, rules, and love. Thank you for doing this work. The screens will blink tomorrow. You do not have to blink back tonight. Use this template after any day you want to learn from without drowning in story. 1. What was my plan before the session? 2. What actually happened in 3 facts? 3. Did I break size, time, or instrument rules? 4. What emotion was loudest? 5. What will I change next session in 1 sentence? 6. What will I keep the same because it was healthy? 7. Who in my life deserves my attention tonight? This template is not poetry. It is engineering. Engineering is how you convert pain into progress. If you feel resistance to templates, notice that resistance. Often it is ego preferring drama to discipline. Drama feels meaningful. Discipline feels dull until it saves your account. Save the template in your Notes app. Reuse it until it feels automatic. Automatic calm procedures are what separate amateurs from people who survive long enough to improve. Improvement is the hidden viral story, not the screenshot. The quiet repetition. If you have thoughts of self-harm, hopelessness that will not lift, panic attacks, or substance use to cope with trading stress, seek professional help immediately. Trading psychology videos are not therapy. Therapists and crisis lines exist for a reason. In the United States, you can contact the 988 Suicide and Crisis Lifeline by calling or texting 988. If you are not in crisis but your trading stress is damaging relationships or health, therapy is still a strong move. Seeking help is risk management for your life. Your life is the foundation that makes trading possible at all. Protect the foundation. Markets are optional. Living is not optional. If you trade as a person who values staying alive and loved. That value system sounds soft. It is harder than leverage. Hard, soft skills are what keep people solvent for decades. Decades beat days. Choose decades. Before you click anything market-related, build a morning sequence that does not depend on motivation. Motivation is unreliable after stress. Sequence is reliable. Example sequence: water, light exposure, 5 minutes of movement, protein within an hour of waking, and a written one-line intention for the day that is behavioral, not financial. Behavioral intention sounds like, I will obey my size cap. It does not sound like, I will make it back. Making it back is outcome language. Outcome language after pain is a trap. The United States rewards hustle narratives, but hustle without scaffolding is how people repeat the same mistake with more confidence. Non-negotiables are scaffolding. If you think scaffolding is silly, measure your last bad day. Odds are high that sleep, food, and calm sequence were disrupted. Disruption is not moral failure. Disruption is predictable biology. Trade biology with respect. Respect sounds soft until you realize it preserves capital. If your morning begins with a phone screen full of red and green, you are starting in someone else's emotional weather. Start in your own body first. Body first is not mystical. It is impulse control. Impulse control is the real leverage. Learn to notice your heart rate and jaw tension before you trade. You do not need a wearable device, though wearables can help. You need a pause. Place 2 fingers, breathe, notice. If you are amped up, your threat system is online. Threat systems prioritize speed over accuracy. That is incompatible with careful execution. After a loss, threat systems stay online longer than you think. If you trade while threatened, you are not trading markets. You are fighting a feeling with orders. Orders are expensive boxing gloves. The cheaper move is to downshift physiology first. Cold water, slow exhale, shoulders down, unclench jaw. These are micro skills pros use without posting about them because they are not glamorous. Glamour is for marketing. Micro skills are for survival. If you fear wasting time on breathing, compare the time cost of breathing to the money cost of an impulsive trade. Breathing is cheaper. In American performance culture, rest feels like losing. Reframe rest as pre-trade calibration. Calibration is what prevents expensive improvisation. Pick one day weekly where you pledge not to compare your results to anyone else's screenshots. Not because comparisons are always wrong, but because comparisons after pain are poison. Comparisons after pain activate scarcity and urgency. Scarcity and urgency are the emotional twin engines of bad trades. A no-compare day is training wheels for adults. It sounds silly until you notice how often you check leaderboards that are not real leaderboards. Social finance is a highlight reel with missing denominators. If you cannot stop comparing, schedule comparison like you schedule worry. 10 minutes, then done. Outside that window, redirect attention to your own logs. Your own logs are boring. Boring is where truth lives. Truth reduces variance in behavior. If you want a pledge sentence, use this. Today I measure myself only against my rules. Rules are a fair opponent. Random strangers on the internet are not a fair opponent because you do not see their losses, their size, or their lies. Protect your nervous system from fake scoreboards. Finance feeds use the same engagement mechanics as entertainment apps. Variable rewards, outrage, novelty, social comparison. That design is not aligned with your trading plan. It is aligned with your attention extraction. After a bad day, dopamine hygiene matters more because your brain seeks fast relief. Feeds offer fast relief that often worsens the underlying stress. Think of dopamine hygiene like dental hygiene. Daily maintenance prevents painful procedures later. Maintenance includes scheduled scrolling, muting keywords that spike you, and removing apps from your phone home screen. If you fear missing edge, remember edge is not a push notification. Edge is preparation plus execution under rules. Notifications are anxiety couriers. You do not need more anxiety couriers after a loss. You need fewer inputs and clearer procedures. In the United States, constant connectivity is sold as professionalism. For trading psychology, constant connectivity is often amateurism with better Wi-Fi. Choose professionalism. Professionalism is boring boundaries. You may break rules again. Humans do. A relapse is not proof you are hopeless. It is data. What matters is whether you have a relapse plan written in advance. Relapse plan includes first action after a rule break, who you tell, how you reduce size immediately, and how you review without self-destruction. Without a plan, relapse becomes shame spiral. Shame spiral becomes bigger trades. That is the addiction pattern adapted to markets. Name it plainly. Then interrupt it with structure. Structure is compassionate. Cruel self-talk is not accountability. Cruel self-talk is adrenaline for more mistakes. Accountability sounds like, I broke a rule. Here is the consequence I promised myself. Consequences should be boring. End session journal walk, no trades for 24 hours. Consequences should not be theatrical. I will prove I am not a loser. Theater belongs on stage. Trading belongs in a quiet room with a timer. If you want a viral story, the viral story is that disciplined recovery is dramatic enough. It is dramatic because it is rare. After stress, reduce the number of instruments you follow. An instrument diet is not forever. It is a stabilization period. Too many tickers means too many narratives. Too many narratives mean too many emotional triggers. A focused watch list reduces decision fatigue. Decision fatigue is a tax on discipline. In U.S., market's breadth is infinite. Infinity is hostile to human attention. Choose boundaries. Boundaries are not lack of ambition. Boundaries are protection for cognition. If you fear missing moves elsewhere, remember you are not trying to capture every move. You are trying to capture your plan's moves. Your plan's moves are a subset of the market. Subsets are enough for wealth if repeated with discipline. If you cannot narrow your list, narrow your session length instead. Shorter sessions with clearer rules beat long sessions with foggy rules. Foggy rules are how Tuesday becomes chaos. Clarity is kindness to your future self. Macro worries are infinite. Inflation, elections, wars, rates, earning seasons. Micro rules are finite. Size, stops, time, and number of attempts. After a bad day, your brain will gravitate toward macro worry because macro feels like an explanation. Explanations reduce anxiety briefly. Markets then introduce new macro worries because worry is a renewable resource. Your stability tool is micro rules. Micro rules are boring. Boring is how you reclaim agency. Agency is not predicting the Fed. Agency is controlling what you click and how large you click. If you spend hours consuming macro takes after a loss, you are often medicating feelings with information. Information without execution discipline is entertainment. Entertainment is fine after hours. During trading hours, prefer procedures. Procedures beat opinions. Opinions are infinite. Procedures are finite. Finite wins when emotions are loud. In American discourse, strong opinions signal intelligence. In trading psychology, strong procedures signal maturity. Choose maturity on purpose. Closing integration. Your name is not your bracket. Your worth is not your week. Your future is not your worst trade. These sentences are not motivational posters. They are cognitive defenses against a culture that monetizes your insecurity. Trading can be a craft. Craft requires repetition, measurement, and humility. Humility is not thinking you are bad. Humility is knowing you are capable of both discipline and disaster, so you build guardrails. Guardrails include sleep, love, rules, timers, and community that does not hurt you. If you want USA scale success, define success as surviving long enough to learn. Learning beats boasting. Boasting gets likes. Learning gets compounding. Compounding requires being alive, solvent, and emotionally steady enough to show up again. Show up again tomorrow with smaller size if needed, with clearer rules if needed, with more honesty if needed. Honesty is not posting pain for points. Honesty is telling yourself the truth in a journal when nobody claps. That quiet honesty is what changes lives. Thank you for finishing this long session. Go drink water. Go touch grass. Go be a person first. The market can wait.